What is going on, ladies and gentlemen? Let me know if you guys can hear me. Getting things set up here so that we can get this live stream started. Let me know how the volume is on your end, and we'll get things going here. Let me know in the chat, guys. Bitcoin is currently bouncing up and down, it looks like. Whiplashing in both directions. All right, guys, let's jump into this. What is going on, ladies and gentlemen? Welcome to another episode of Let's Talk Crypto. I am your host, Jay, and today we're going to be covering a few things. There's been a lot going on in the market this week. We've had the Mt. Gox news for the 10th time, which dumped the market, right? Every time we get this at least 2 or 3 times a year, and every single time that this news comes out, Bitcoin's price dumps. So it's really annoying, but it's something that we're gonna keep seeing going forward until it finally happens, right? So we'll be covering that today, that news, and how that's and why that's impacting the market, how it might impact the market going forward, when they start actually giving back, paying back the money, the Bitcoin. We're also going to be talking about, we're going to do a brief history on what Mt. Gox is and all that, if in case you guys don't know what it is. We're going to also, on what's going on here, we're going to look at what else has been going on in the market. So we had news about the German government selling Bitcoin. We've had a bunch of news about miners selling Bitcoin. So basically, and we've got, of course, news that there's been outflows in Bitcoin ETFs. So basically, everybody is selling Bitcoin right now. And we're going to be covering that and why you should not be selling your Bitcoin. So we'll be touching on all of that. What else? Then we'll jump into a technical analysis on Bitcoin. Where we're going to go over a very specific pattern that I think is very, very bullish if it plays out. So last time, about 1 or 2 weeks ago, we spoke about a double top pattern with a target of $61,500, and it came true, right? It happened. Unfortunately, I don't like when that happens. I wish I was not right about that. We actually went beyond 61,500. Today, we're also going to be talking about, now a bullish reversal sign to the upside. So stay tuned for that during the analysis. And then what else do we got today? We're going to look over the halving cycle, where exactly we are in the halving cycle, why there's a lot of people saying, why hasn't Bitcoin taken off yet? So we're going to be kind of touch on that, see where we are compared to historically where Bitcoin's price has been during the same exact time after the Bitcoin halving. And we're going to talk about when Bitcoin, we can expect that next leg to the upside to set up new highs, new all-time highs. And a lot of things that are coming together, which I consider a perfect storm that's really going to send Bitcoin through the roof, and which is why I'm very bullish for Q4 of this year. So that's all the stuff we're going to be talking about. I know it's a lot. We're going to try to condense all of this into 1 hour. And then what I'm going to do is I'm going to try to cut this up into a smaller video for you guys. So in case you miss anything, you guys can then watch the cut up video. So without further ado, let's go ahead and jump right in, starting with the news, right? So this is what came out yesterday morning, or at some point yesterday. Mt. Gox to begin repayments in July. Bitcoin slides under 61K. So as we all know, Bitcoin ended up sliding way beyond that. We actually went yesterday as low as $58,000, $58,166. So why did this happen? Well, every single time that we've gotten any type of news from Mt. Gox, Bitcoin has dumped. That's just how it's been every single time, literally. And this is something that's ongoing literally for 10 years now, because this happened back in 2014. When the hack originally happened, we had a major dump off. So let's kind of talk a little bit about what Mt. Gox is and what exactly is it that happened with Mt. Gox with this hack. Let me transition here to. All right. So Mt. Gox initially was created by Jed McCaleb in 2010, and it was originally a platform for trading Magic the Gathering cards, which is why the name Mt. Gox, right? MT, Magic the Gathering Online Exchange. So that's kind of where that name comes from. But McCaleb sold the site to Mark Karpeles in 2011, who transformed it into the largest Bitcoin exchange, handling up to 70% of all Bitcoin transactions by 2013. Now, in February of 2014, Mt. Gox suspended trading and filed for bankruptcy after announcing the loss of 850,000 Bitcoins, which at the time was worth about $450 million. Now, due to the hack, the hack involved the theft of private keys, and it allowed hackers to withdraw Bitcoins undetected over several years, basically. Right, so that's what happened as far as the hack, back all the way back in 2014. Now, the collapse of Mt. Gox had a significant price impact on the cryptocurrency market, causing Bitcoin prices to plummet from over $600 to under $100 within seconds due to panic selling and loss of confidence. The event highlighted major security vulnerabilities within crypto exchanges, leading to increased regulatory scrutiny and demands for better security practices. The aftermath included legal battles. The arrest of the guy who bought it, Mark Karpeles, I think that's how you pronounce his name, and a lengthy process of civil rehabilitation to recover and distribute the remaining assets to creditors, which it's been an ongoing process. It still has not happened. Now, the incident remains a cautionary tale in the crypto world, emphasizing the importance of security, regulation, and the potential risk involved in cryptocurrency investments, which is why we always tell you guys, if you don't have a cold wallet, first of all, the safest way that you can protect your crypto, store it in your cold wallet. If you don't have a cold wallet, you should get a cold wallet. If you don't have a cold wallet yet, but you're getting one, you should be diversifying your holdings into multiple different exchanges. Don't have all your eggs in one basket, essentially, so that if one exchange goes under for any reason, you still have other assets remaining because you had it diversified across plenty of different exchanges. So for example, not only do I have funds in my cold wallets, but I have funds on like Gemini, Coinbase, crypto.com, where else? I have on Bybit, on KuCoin, I have crypto spread around like so many different exchanges. I also have on MetaMask, I have on the Coinbase wallet. So basically it's spread around everywhere. So even if one of those goes down, which is a possibility in cryptos, as we've seen with Mt. Gox, we've seen it with FTX, we've seen it with a bunch of different exchanges. Even if that were to happen with one of them, I'd still be okay. It would hurt, of course, but I'd still be okay because I have diversified my holdings into many different areas. So that's more or less what's been going on with that. Now, let's take a look at the impact, right? Or well, we've spoken about the impact here. Now, as far as more or less, we kind of touched on the impact a little bit, but as far as what people are thinking about it, they're predicting that the market impact of the Mt. Gox repayments will be limited due to the structured and phased approach of the repayments. So some experts believe that the psychological impact on the market is going to be more significant than the actual impact of the repayments, right? Because the repayments aren't going to be just given out all at once. They're going to be in phases. And out of all those repayments, all those people that they're paying out, not everyone's going to sell as soon as they get it, right? So then what actually is dumping the market is just the news, the psychological thought of enough people saying, oh my God, $9 billion worth of Bitcoin are going into the market and they're going to get dumped, right? So that's what everyone's reporting, that $9 billion are going to get dumped onto the market, and that's not true. What's going to happen is going to start rolling out in small phases purposely so that $9 billion doesn't all get dumped at once. So the way that they're paying it out is they've structured it purposely so that it doesn't impact the market. So that's the main thing that we have to understand. But that's not what people are. That's not the way people are playing it right now. There's enough people that are reading these headlines and thinking $9 billion are gonna get dumped into the market. So they start selling, right? Once Bitcoin starts, falling hard, now that brings the next group of people, which are panic sellers, to begin selling, right? Once they begin selling, it starts this cascade at that point of traders, and then begin to get liquidated. So now we have the people that are reading headlines selling. We have the panic sellers watching price fall selling. Now we have traders getting stopped out of their positions selling, right? Which causes that cascade to where we get these 7% drops in a matter of hours. And then after that, we have even more panic sellers on top of that. So it's a snowball effect, right? And it all starts from this news with enough people believing that $9 billion are going to get dumped into the market. And it begins to kind of, from those sellers to panic sellers to people getting liquidated. I think yesterday we had, let me see if it tells me here. We had about $250 million, I believe, liquidated yesterday, maybe more, around 300-400. I'm not exactly sure on the number, but we had a lot of liquidation. So then after that, we have more panic sellers, right? So it's just a snowball effect. So that's something that we have to think about. Don't think in such short time frame, guys. This is Bitcoin. Things do get quite volatile. That's part of the game. If you're holding for long term, then your vision should be at least for the next 12 to 18 months, not for today or tomorrow, right? So and for the next year, I think I'm very, very bullish overall on crypto, and I'll explain why in a little bit. So that's just more or less what I'm thinking here as far as how this is going to impact the market and how it's currently impacting the market, like we saw yesterday. Right. So some of the measures that are that are mitigating, of course, like we said, that the repayment process is designed to be gradual with phased distributions to prevent a sudden influx of Bitcoin into the market, which helps to minimize potential disruptions. Right. Coordination with major exchanges and stakeholders ensures that repayments are conducted in a controlled manner, reducing the risk of market manipulation and price crashes. Transparency and clear communication with creditors and the market about the repayment schedule and amounts help manage expectations and reduce uncertainty. And some measures include potentially staggering, which we just spoke about, the release of Bitcoins over extended periods, and allowing creditors the option to receive payments in fiat currencies instead of Bitcoin to lessen the impact on crypto markets. So there's a lot that's going into it. There's a lot of measures that are purposely have been planned out for the last 10 years so that there's not a lot of impact on the price of Bitcoin. So right now the impact that you're seeing on the price is more based on just panic sellers, people getting stopped out because they're over leveraged, and people that are just kind of reading headlines and selling based on that. So yeah, that's pretty much the overall idea there on what's going on. As far as the repayment process, let me pull up the page again here. The repayment process is set to commence in July 2024. So it's set to commence at some point. It doesn't show here the picture, but it's set to commence at some point in the beginning of July. So in the next week or two, following a court-approved civil rehabilitation plan designed to return lost assets to creditors. The process aims to address the financial loss incurred by Mt. Gox creditors nearly a decade after the exchange's collapse. Now, the repayments will be executed in multiple phases to prevent a sudden influx of large volumes of BTC and BCH into the market. So that's another thing that we need to think about. This is not only Bitcoin, this is also Bitcoin Cash. Now, each phase will distribute a portion of the total assets to creditors, ensuring a more controlled and gradual release to mitigate potential market disruptions. The phases approach is designed to provide stability and maintain market confidence by avoiding abrupt changes in liquidity and supply. So there we go, guys. Now, the next thing that's been going on, and that's pretty much everything on what's been going on with Mt. Gox. So if you guys have any questions, feel free to ask in the comments there. But the next thing that's been going on in the market that has been kind of headlining beginning last week, this is what began our drop, I believe. And what started it all was Germany, the German government, selling Bitcoin. So let me see if I can find it here. Let me pull it up for you guys. So this was from a few days ago. Bitcoin dips 3.5% as German government sells 325 million Bitcoin over 2 days. So this is the other thing that has been kind of bringing a lot of panic selling and fear into the market. It's another reason why we've been dipping. It wasn't just yesterday. It's been over the last few days, right? If we look here, we can see over the last few days, Bitcoin has been, pretty much on this big downtrend here that we see. And it began with this here. So basically what's going on is that the German government seized nearly 50,000 Bitcoin from the operators of a pirated movie website called Movie 2K earlier this year. Recent movements in a crypto wallet labeled as German government indicate that the government started moving Bitcoin on June 19th of 2024. So that was about less than a week ago. Current selling activity, the German government moved nearly 6,500 Bitcoin worth about $425 million to various addresses. Some of these transactions involved transferring Bitcoin to exchanges like Kraken and Bitstamp. The government's wallet currently holds still around 43,359 Bitcoin, valued at about $2.8 billion. Now, the selling activity by the German government has sparked concerns about potential volatility in the Bitcoin market. Large-scale movements of Bitcoin can lead to significant price fluctuations due to increased supply on the market. But despite these movements, not all transferred Bitcoins were liquidated immediately. However, the mere prospect of such a large stash being sold has contributed to market anxiety. So that's pretty much what's been going on there with Germany, right? They have they had over 50,000 Bitcoin worth a lot of money, like 2.5 billion. They've already sold around $500 million, but they still have around $2.8 billion basically. So that's the main issue right now. And again, similarly to what's going on with Mt. Gox, the market sees this. People that only read headlines, they see, they've sold 400 million in Bitcoin. They still have 2.8 billion, so they're gonna probably sell it. And they start trying to front run these things, right? So, and then when you put both of these together, we have Mt. Gox with $9 billion worth of Bitcoin. Plus, we have the German government with another $2.8 billion worth of Bitcoin. So we're talking about $11.8 billion that needs to come into the market to be sold, right? At least that's the thought when you just read headlines. But that's not at all exactly how it's playing out or what's going on. So again, and even though they could sell it all, right? Guys, even though it's gonna affect the short term, long term, I think this is actually gonna flush out these big sellers, so that long term in the next year, we have a more clear pathway to, for the Bitcoin's value to go up. So remember, because of the Bitcoin halving, there's the supply got cut in half of what's going out every single day. So although they're adding supply back into the markets right now, the halving still happens. There's less supply going out every single day. So that's something that we also have to account for. And eventually that supply shock is gonna come in. It's gonna happen. So that's when Bitcoin's parabolic rise is really gonna begin. So that's pretty much what we have to be thinking about, instead of just thinking that everyone's gonna sell Bitcoin and they're gonna dump Bitcoin. So even with all this that's been going on, Bitcoin's still holding on above $60,000, which is really impressive. We went as low as 58,000 yesterday, and that's not all. So Germany is not the only one that's selling, and this is also another reason of what's been going on in the market. Miners selling Bitcoin. Bitcoin miners in historic sell-off, dumping over 30,000 Bitcoin worth $2 billion this month. So this month alone, on top of everything else that's been going on top of Germany selling, $500 million in Bitcoin, miners have also sold about $2 billion worth of Bitcoin. So there's been a lot of things just kind of stacking up on top of each other. And this is something that happens every single time. This is not anything new when it comes to Bitcoin miners selling. So this actually happens a lot whenever after the Bitcoin halving, miners begin to sell. So let's see, the rapid sell-off has induced miners' reserves to their lowest level in more than 14 years. This sell-off is due to lower profits after the Bitcoin halving event. So Bitcoin miners basically have increased their selling activity, and this is due to market conditions and the need to cover operational costs. Prominent mining company Marathon Digital recently sold 1,400 Bitcoin worth about $100 million as part of this broader trend. The transfer of $209 million worth of Bitcoin from miners to exchanges has coincided with recent market dips. This indicates that miners' sales are contributing to the current downward pressure of Bitcoin prices. Miners selling their Bitcoin holdings in significant volumes can lead to increased supply, further influencing price volatility and market sentiment, right? So this is nothing new, guys. Every single time that Bitcoin halving event happens, miners have to begin selling in the beginning because one, they have to sell to upgrade their hardware, their equipment, right? So now that Bitcoin is not giving as much returns and the hash rate has gone up, so mining difficulty is harder to earn, they have to get new equipment. They have to update all their equipment. And that's why a lot of them sell after the Bitcoin halving event happens. So once it happens, they need to sell. They need to get new equipment, basically. And then is when we see a parabolic rise. So one way that you can actually track this, and there is a way, and I'm going to show you guys. This here is called the Bitcoin hash ribbon indicator, right? If we look back on this, and the Bitcoin hash ribbon indicator, I've done multiple videos on this that you guys can check out. Basically, let's go all the way back here. All right, so basically, this tells you when there's capitulation, basically, when miners are selling, right? So what happens is miners are selling, and then eventually they stop selling, and we get this buy signal from the hash ribbons indicator. Once we get this buy signal, what tends to happen soon after, look at this, look at Bitcoin's price. So let's look at Bitcoin's price after the buy signal here. Let's see, the buy signal happened, let's put it more or less when it happened. It happened here. Let's see what happened soon after that. Bitcoin's price went up 151%, right? That could just be luck, right? Let's look for another one. All right, so we got another Bitcoin buy signal here. Let's see, before we got the next buy signal, let's see what happens here. So we went up about 56%. So that one wasn't as much as this one, but it went up again. Let's look one more time. So this one right here, before the next buy signal. So this one didn't work out as well, but it still ended up positive. But you can see this trend when anytime we get this buy signal. Whoops, where's the price? Here we go. Especially after, if you look at it in the context of after a Bitcoin halving. So let's look at the previous Bitcoin halving, which was 2020, right? 2020, we had the halving. And let's see what happened here. Had the halving. And then it looks like in July, so look how similar this is. From May through June, price was struggling, right? Look at prices during this time. We had dump off, we had just a big accumulation range here, and then we finally got this buy signal. So once we got that buy signal, what happened? Look at prices. So let's look here. Let's see what prices ended up doing. So after that buy signal till the next buy signal, we went up about 117%. When we got that next buy signal, which was more or less here. So we got a second buy signal, and this happened also at the end of 2020. And you can already see where this is heading. We got a 246% move when that happened. So right now, we're kind of in that same spot right now, where we've gotten all of this all the way since May. Remember when we looked at 2020, this began in May, and eventually we got the buy signal. When was it that we got the buy signal in 2020? There's 22, 2020. So we got the buy signal in July. So around mid-July, we got a buy signal here. So we're kind of looking for the same thing. We're going to look for a buy signal potentially in July. Now, if we look at the weekly, I think the weekly is even more accurate here. So on the weekly, if we look at it, you see that we have less buy signals. So that cleans out, I believe, some of the false signals, like the one that we saw that had like only a 3% gain on it. So this one here, if we look at these buy signals instead on the weekly, same thing, right? We got a buy signal here in 2023. Price went up about 84%. We got a buy signal here. Let me see. Yeah, right around here. This is the one that went up 157%. Let's look back at 2020 after the halving. When did we get that buy signal? So we got a buy signal in April of 2020. You can see that price went up. We got another one in July of 2020. Price went up. We got another one in November of 2020. We can see how price went up. Got another one in August of 2020. Price went up. So we can see on the weekly here, this is actually probably the best time frame to look at these at on the weekly. And what we're looking for, what we're going to be looking for is a buy signal here, right? We want to see this turn to a buy. And based on what happened in 2020, that could potentially happen maybe sometime in July. So let me see, how far does this go back? Let me see if I can pull up another one here where we can potentially see 2016 when the previous halving happened here. So this is the previous halving here, and look at this. So ignore all this mess here for right now. I'll zoom it out. Is that it's super zoomed in right now? So you can't really see all that, but it's not very important. What's important is this buy signal. And this buy signal ended up happening after the halving. This blue line is a Bitcoin halving. After the Bitcoin halving, we got the buy signal in August, right? So that's 2016. If we go all the way to the very next Bitcoin halving, here's the Bitcoin halving again. We got the buy signal in July of 2020. How much further back does this go? Let me see if this shows us even the previous buy signal. So, okay, 2012, when that was the other Bitcoin halving, right? That was, I believe that this is the first Bitcoin halving. We got the buy signal in February of the very next year. So obviously there were a lot less miners, and Bitcoin was less mature at that time. So the most important ones that I'm looking at is 2016, we got the buy signal in August. In 2020, after the halving, we got the buy signal in July. And then right now, the halving just happened, and we're looking for the buy signal. We're waiting on that. Once that buy signal happens, that signals, I believe that's the signal of the fifth and final phase of the Bitcoin halving cycle, which is the parabolic run. So that's what we're looking for here, and we'll talk a little bit more about that when we jump into the Bitcoin halving cycle review. So, but that's just as far as Bitcoin, the miners selling. That's all part of what happens every single cycle. Eventually, we get that buy signal from this indicator. So if you guys want a way to track it, this is how I recommend you guys to track it. I've done multiple videos going in depth on how this indicator works. So if you guys want to check that out on the page, make sure to do so. So let's see what is next. So we spoke about all the selling, right? Mt. Gox. We covered Germany's government selling and miners selling. So now let's jump into a technical analysis here on current price. What is happening with the price? What I'm seeing, how things are looking, and where we could potentially go from here, including a bullish reversal pattern that's on the charts right now on the daily chart. So let's go ahead and touch on those. All right, guys. So right now, this is a weekly. I always like to kind of start off from the top, work our way down. Let's switch the chart here. just for something a little cleaner. Let's close this out. So now there's still a lot of stuff here. Let me get rid of some of these. All right. So it's very simple what we're looking at here, guys. We've had basically a 19% drop. We had this double top type of pattern, right? So we spoke about all of these things, and we spoke about the potential of hitting $61,500, which we went way beyond that. We ended up going down as low as $58,000. This one was $58,450. So depending which exchange you're looking at it on, it went to a different amount, but that's pretty much what's going on overall. However, as we zoom out further, what do we see here? We see a big impulse move up and consolidation. This is not new. We literally just saw this recently, right? If we look here, we had this big move up, big period of consolidation, another impulse move up, another big period of consolidation. So, you know, this is something that we've seen kind of over and over again. Even if we look back here, let me get rid of this because it's in my way. So even if we look back here, when we bottomed out, we had this move up, consolidation, move up, consolidation, move up, consolidation, and it continues, right? So we've had 1, 2, 3, 4, 5. So this all is part of a growing market and part of a healthy run up, right? What's not healthy is if everything just went straight up in a straight line like that. That's not how things should or ever move. I know that would be a lot easier to just see everything just go up in a straight line. We all get rich and that's it. But unfortunately, that's not the way the market works, right? So let me get rid of all these lines. What we're seeing right now on the weekly is this big, this could be called a hanging man. This could be called a hammer. So it just depends how you're looking at it. I'm looking at it from a bullish standpoint. So I'm looking at it as a hammer candle here. And basically we're seeing buyers stepping back in this zone the same way we saw it here. So we had a similar candle here. I would love to see this candle finish in the green just like this one. So for us to go on the green, we have to go above, let me see, this opened at 63,152. So we have to get back above 63,152. That's basically a number to get back into the green before Sunday. So we have plenty of time for that to happen. And if you don't think that's possible, look at this one. This candle went even lower. This one went all the way down to $56,500. And it opened at the same exact spot almost. This one opened at 63,152. This opened at 63,106. So we can see there's a big support here, right? There's a lot of buyers here. Let's pull up the volume shelves to see if this shows us this same thing. And we can see that there's a lot of activity here. As it drops off, then there's a drop off. So you see here, basically this is around $60,000. Once we drop off, there's not a lot of activity in these spots, which is why Bitcoin's price falls through it so fast, right? So we've seen it as soon as it lost 60,000, it basically just kind of moves really quickly through here because there's not a lot of activity there, right? But we've seen it get bought up every single time. So long wick to the downside, you can see all of these long wicks to the downside. That's always a bullish sign when we're seeing long wicks to the downside, that means that there's not enough sellers. Buyers are stepping in, pushing prices back up. That is bullish overall. When we have long wicks to the upside, that's usually a sign of weakness to that side, right? So that's why when every time we've reversed, we've had a big long wick, right? Big long wick. Every time, big long wick, big long wick. There hasn't been enough buyers to push prices, to continue pushing prices up above these levels up here, right? So if we look at the bottom of this, we're seeing the same exact thing. Look at all those wicks. Look at this big wick. Look at this big wick, right? We're seeing reversals here. We're seeing there's not enough. We're seeing buyers step back in, buying this back up, pushing prices back to the top. So I think here we could potentially reverse our course here and potentially, not quickly, you know, but slowly kind of work our way back to the top of the range, which is up here, or right around that $70,000 area. That's where we've been rejected every single time, right? We've been rejected at 70,000 every single time, all the way back since March. So we've been getting rejected now for about 3 months. We're going on 4, right? So now let's go into the daily time frames here. Let me take off the volume shelves. Take off, let's see. So on the daily, I'm gonna remove this. We are down, like I said, 19% from our recent highs that we hit up here. Let me see. So our most recent high was basically $72,000. From our all-time high, we're down about 20%. Right? So we've gone down about 20% from our all-time highs. Overall, the lowest we've gone from all-time highs was about 23.5%. So currently we're sitting 16% from all-time highs and 14% from our most recent highs, right? So now that we know that, we're looking at this, and this is basically the trading range where Bitcoin has been. So we've visited the top of the range multiple times, fallen back down to the bottom of the range, revisited the top of the range, fell back down to the bottom of the range. So now are we going to go back up is now the next question, right? Now, one thing that I'm looking at here is this. So this right here is an inverse head and shoulders. So I'm sure most of you guys have heard about head and shoulders. This is the inverse, right? It's a head and shoulders upside down, and it means the opposite. So a head and shoulders is a bearish reversal signal and reversal sign that price is going to go lower. A inverse head and shoulders is the opposite, is a bullish reversal sign that price is going to go higher, right? So let's try to figure out here where the neckline is and what price target we might get from that. So first, let's figure out this neckline. So let's get let's just draw it. Let me get a trend line. Just put the horizontal ray. And the neckline is pretty much going to be that $70,000 range, right? So I really don't have to draw it because it's already there. This Fibonacci level here is basically $70,000. That seems to be the neckline there. So the way that we figure out the target for Bitcoin's price is by measuring from the top of the head. So now it could either be from the wick or from the close here. Let's start with the wick and then we'll do with the close. So from here to the neckline. So this is more or less about from the head to the neckline. Now we get this and we put it on where a breakout would happen, right? Breakout would be a break above the neckline. So if we broke the neckline, this would be our target. And this gives us a target of about $84,000 for this pattern. Now let's do the same thing with, instead of the neckline, let's do the close of the body to the neckline. And let's put this on a break. If this were to break at about 70 grand, that gives us a target of about $82,000. So pretty much that means that we could get anything between $80,000 to $85,000 pretty much, right, with this move. So now for this move to be confirmed, like I said, we have to break above the neckline, which is this right here. And then that gives us we have two targets here, more or less. We can kind of average those out between 82,000 and what was the other one, about 84,000. So that gives us a target, an average target of about 83,000 for this pattern. And this is the next pattern that I'm looking at. Now this is on the daily. This doesn't mean that it's going to happen right away, but this could happen over the next few months, right? So that's something that we're watching here on the daily. We're going to continue watching it because this has to form here, right? Right now, it hasn't really formed. It's still, we need some time here so it can form here. And then once we start getting a move up, that it completes a shoulder here, then we'll have the left shoulder, we'll have the head, and we'll have the right shoulder. That'll pretty much confirm the pattern for us. And then with the next move up, if we break above this, then that confirms a break above the neckline for this inverse head and shoulders pattern, which could lead to our targets up here between around $83,000 basically on the average of those. So that's one thing that I'm going to be watching here as we now go into quarter 3 and eventually quarter 4. I think this is something that we might see in quarter 4, right? So it could still be a few months away. So another thing that I wanted to look at here was RSI. So on the RSI, you can see that yesterday we touched the oversold area for the first time since way back here in 2023. So it's been pretty much a year since that happened. And one thing that we can see is last time that happened, after some consolidation here, we did get a move up. You can see this move up here ended up being about an 11% move to the upside. We did once again then drop after that, consolidate for a bit, and eventually we got again a move to the upside. That was a pretty big move. I think that was over 100% move all the way here, 95%, right? After it being oversold here. And let me see if we continue down back in history. We see back in March, we see another oversold here. And what happened after that? We got a massive rally to the upside of, over the next few weeks of about 60%. And, you could just kind of keep looking back at any time RSI on the daily has been oversold and see what price did at that point. And we can see consolidated for a while, and then we got a big move up, about 60% move up once that happened. Again, even going into the bear market, right? In the bear market, we got that. And what happened from here to here, even though we're in the bear market, about a 43% move up. Now in the bear market, things are a little bit different because we can expect prices to continue down. I wouldn't be looking to play these oversold positions here. But we can see that it does work, especially in a bull market. Anytime we're oversold, you should be looking to buy at that point, basically. So, and it just happened recently again. So we recently, yesterday, hit oversold. So I'm expecting us to bounce, and we've already had a bounce, really. From the bottom here to where we currently are, we're up about 5.6, 5.5%. So we've already began to see that nice little bounce there in the market. I think this could potentially continue up and continue giving us a nice bounce. And if we look at the 4 hour, the same thing, right? On the 4 hour, we're massively oversold, and we began to bounce here. You can see last time we were oversold right here. Same thing happened. We got a move of about 6% to the upside. The time before that, when we were oversold, if you look here, we got a 16% move to the upside after that. And if you keep looking back, you could do this on your own. I'm not gonna do it. I'm not gonna keep doing this because we'll be here for a while. But you can see that even in this here, we got about a 9% move to the upside. So that's something to keep in mind. Anytime we go into oversold here on the 4 hour, especially on the daily, I think the daily is going to be even more a bigger signal for me, a bigger trigger for me. Those are good signs that price is about to bounce, basically, right? So yeah, so that's the RSI. That also is telling me that we should see a bounce here going forward. We should be seeing some sort of bottoming out here and a bounce. It might not happen today, even though today we're already up about 2.5%. From the bottom, we're up about 5.5%. We should continue to see some type of bounce back to probably retrace really what we lost, hopefully. So let's see if we get that. If we get a retracement, that'll probably put us back around 64 to 60, between 64. So I'll count from here, potentially up to like $68,000. That'll be that full retracement there, and potentially more, right? We could potentially even go all the way up to the top of the range there at 70,000. So let's see what else are we covering here today. And if you guys have any questions about any of this that I'm covering, I know I've been talking on and on for about 50 minutes now. Just drop it in the comments, drop it in the chat. I'm happy to answer any questions you guys have, so I'm not just rambling here on and on by myself. If not, I will continue to go on as we close things out here. The next thing that we're going to talk about is Bitcoin's halving cycle. We're going to take a look at it. We've spoken about it a bit already today when I was speaking about miners selling Bitcoin and the hash ribbon indicator. So let's go ahead and kind of take a deep dive into the Bitcoin halving cycle, where we are currently, and compare it to where we've been in previous cycles. And then we'll close things out with Bitcoin halving in Q4. So let's go ahead and dive into that. I don't know why I just said we'll close things out with Bitcoin halving in Q4. We'll close things out with Bitcoin's most bullish quarter. I've been talking too much, guys. I apologize. So let's open this back up here. Let's go into the weekly. And let's take a look here. Let me close this out so we don't get no distractions here. Let me take a sip of water and then we'll be ready to go. What's going on, Giannis? Nice to have you in the chat. Appreciate you tuning in. All right, guys. So let's take a look at this. Make sure you guys are on the right thing. Yep. All right, we're good to go. So this is currently where we are in the Bitcoin halving cycle. The way to simply describe how the Bitcoin halving cycle works is through phases, right? So we have 5 different phases in a Bitcoin halving cycle. We have the pre-halving accumulation phase, This usually happens after Bitcoin's price bottoms out and begins to accumulate, basically. Then we have the pre-halving rally. This tends to happen before the Bitcoin halving, hence the name, as people begin to get excited and buy the news type of event type of thing. Then we have, oh, hold on guys, excuse me, my dog is playing with a very loud toy. Hold on a second. Teddy, no, relax. All right. Where was I? No, Teddy, you have to leave it. You're making too much noise. You gotta relax, buddy. You gotta relax. All right, so then we have the pre-halving pullback. So that's basically what happens here, where this is right before the Bitcoin halving. We typically get a pullback, which plays out something like this. We saw it again here. We've seen it in previous halvings, and we'll look at previous halvings in a second. Then we get phase 4, which is the post-halving accumulation, which is pretty much exactly where we've been. And look at this, guys. We've been speaking about this for the last like few months, really, before the halving. Everyone was saying, the Bitcoin halving's coming. Bitcoin's going to go to the moon. We were saying, no, the Bitcoin halving's coming. Price is first going to accumulate for about 3 months. And then, we can talk about Bitcoin going into the moon, which is phase 5. And this is the final phase of the Bitcoin halving, which is the post-halving rally. So this is a phase where, Bitcoin tends to begin just taking off and having that parabolic run. This typically really begins in Q4. So we'll talk about that, as well as why it usually begins in Q4. But right now, just get the idea down of how the Bitcoin halving cycles work and why price is doing what it's been doing recently, right? This is not anything new, guys. We've literally had this drawn out for months before the Bitcoin halving even happened, and things are playing out exactly how we've drawn them out. Right now, we drew these out based on historical data, right? How Bitcoin's price has done historically is how we kind of took an average of all those, and is how we've drawn this out. And this is exactly how it's been playing out so far. It's literally been playing out almost to the T, right? Just almost too perfectly. So let's look at what happened last time, right? So this is 2020, 2021, our last Bitcoin halving and our last Bitcoin halving cycle. We can see here, same thing, phase 1, price pre-halving accumulation. Phase 2, now we did get something different here because we had a COVID crash. This is an outlier event, so we don't take that into account. But after the COVID crash, we had the pre-halving rally, right? So after that COVID crash, we went right back onto schedule. Then we had a smaller than usual phase 3, the pre-halving correction, and I think this was in part because of this outlier event. Then we had the post-halving accumulation. This was only 70 days. Again, I think this was in part due to the outlier event that we had back here and everything that happened in the macro economy. It was a lot shorter than usual, and you'll see what I mean in a second. And then in July, we really got that move up. In September is usually not a good month for Bitcoin. But once we went into October, Bitcoin's most bullish month, you can see the rest is basically history. Now let's go back one more time to one more halving. And let's look at this so that we see that it's not luck. Right? This is not luck, guys. This is not by chance. This is not by luck. This is not a coincidence. This has happened every single time. So 2016, 2017 bull run, Bitcoin halving cycles. Same thing, phase 1, accumulation. Phase 2, a rally. Phase 3, a correction. Phase 4, once again, accumulation. And look at this. It went down lower than the pre-halving correction, similarly to what we've done this time around in phase 3. I'm sorry, in phase 4. Phase 5, I can't see where is this? Here it is. Phase 5, post-halving rally. And when did this start? This began basically Q4, same time, right? If we kind of look at this, you see September, we see July was not good. August wasn't good. Accumulated throughout August. September just accumulated. Then once October came around, look at what happened. The rally really began. So October seems to be the time that, really lights the fire under that rally. So keep that date in mind, right? And let me see, did I draw another one here? I'm not sure. I don't know if this went far enough. No, so I didn't draw it for 2012. No. All right, so I just did 2016, 2020, which was the last halving, and where we are right now, which is the current halving. So now you see that this is all by design. It is not luck, right? This is a pattern that has happened over and over again. And that's why we're tracking this pattern to see, because it gives us kind of a roadmap of what could happen, right? Where price could be going, how price is going to be acting. So now that we know the 5 phases and how Bitcoin has historically done, let's look at why Q4 is probably gonna be the time that that we take off. So we already saw historically in October is when that phase 5 really begins, when that Bitcoin rally really starts to take off. Now, the other things that we have to take into account is in Q4, every single time has been the presidential election, right? That is always bullish in markets overall, not just crypto, but just markets overall. So that also tends to help Bitcoin in Q4 to really take off, right? Now, the next thing is the supply shock that happens in Q4 is usually when it tends to begin to happen, to that supply shock within the market, right? That helps Bitcoin really start to take off. And then the final thing that we have this year is the rate cuts. Rate cuts are still expected to happen. We're still expecting 1 to 2 rate cuts by the end of this year, which is very, very bullish for just overall markets and crypto especially, right? So let's take a look at what we're thinking when the rate cuts might happen and what the probability is real quick. And we'll wrap it up with this, guys. I know we've been at it for about an hour now. So our next rate decision is on the 31st of this month. So it's actually in about a week. Again, we're expecting a pause. We're not expecting anything crazy here. I'm sorry, this is July. I'm sorry, this is not in a week. Our next rate decision, we already had it for June. So our next rate decision is in about a month on July. Now remember, every time we've led up to that rate decision, Bitcoin's price has dropped a few days to potentially a week prior to it. So remember that for this time, right? We have to remember that because last time we got caught on the wrong end of it. But every single time this year that we've had a rate decision, Bitcoin's price has dropped leading up to it and then pretty much retraced. So something to remember for next month. The next meeting after that is in September. So there's basically a 65% chance for a rate cut in September. If we do get this rate cut in September, which is usually a bad month for Bitcoin, we will see prices go up. As we continue to go further and further out, the next rate decision meeting is in November. There's a pretty much an 80% chance for a cut. there's a 26% chance that we get 2 cuts by then. And then in December, there's a 95% chance that we have at least 1 cut in December. There's a 43% chance that we have 2 cuts by December, right? So, well, actually there's more, because 43 plus 20, right? So it's actually about 65% chance of 2 cuts by December. So that's actually pretty high. So yeah, the market right now is expecting, and the probability is shooting for 2 rate cuts by the end of this year, which is pretty crazy. So if we're thinking that we're going to get 2 rate cuts by the end of this year, we have the supply shock happening, we have the presidential election, we have Bitcoin going into phase 5, which is the post-halving rally, which usually begins around October. All these things are lining up to be a perfect storm for Bitcoin to really begin rallying in Q4 in October, towards the end of this year, and really hitting potentially, $100,000. I think $100,000 is in the books, is in the cards for Bitcoin by the end of this year. So if we're thinking that, then now is a time, this is potentially our last shot to accumulate Bitcoin at this current range, right? At $60,000, potentially under $60,000. And that's also the same thing with altcoins. Majority of altcoins are down like 50 to 60% right now, which is insane. Let me pull this up really quick so you guys could see how crazy this is. Let me see, where is the chart? All right, let me put this chart on the screen. So let me refresh this. Look at this, guys. ICP, this is a top 25 basically altcoin, is down 98% from its all-time high. We have Algorand down 96%. We have VeChain down 90%. We have Bitcoin Cash down 89%. Now, I don't think Bitcoin Cash is going to get back to $4,000, but we have Cardano. Cardano is one that I do think could get back to that $3 mark, maybe even beyond. It's down 87%. That's crazy. Just a move back to its previous all-time high is basically a 7x at this point. We have HBAR down 86% as well. A move back to its all-time high, which I do believe it can do, is a 6x, right? We have AAV also down 86%. We have XRP down 85%, 86%. We have Atom down 84%. Guys, there's so many coins here that are down so much that there's so much opportunity. Look at this. Avalanche down 82%. Matic down 80%. There's a lot of top coins that are going to eventually get back to their previous all-time highs that are down so much. Chainlink down 73%. Near down 72%. So yeah, guys, I'm thinking there's a lot of opportunity in the market, and these next few months are potentially your last chance to really take advantage of these opportunities. We don't know how much longer before things really begin to rally, right? We're thinking October, but we don't know for sure, right? We don't know where the local bottom is going to be, which is the best potential area to get in price-wise, right? So we have to begin to DCA, to dollar cost average into these positions, since we don't know when that bottom is going to be. But we know that a year from now, prices are not going to be where they are right now. We're going to be seeing all-time highs a year from now, right? A year from now, we'll look back to this date, to this drop, to this pullback, and think, damn, I wish I would have bought some during that time. Now, we don't know where the exact bottom is. That's why we have to dollar cost average. We just know that more or less during this time is going to be when that local bottom comes in. and it's gonna be our last opportunity to really dive into these at these crazy prices where we're gonna get crazy returns. So remember, guys, wealth is not built during the bull run. It's not built when we're hitting all-time highs. It's built during these times when there's big pullbacks, when everyone's panicking, everyone's afraid, there's a lot of fear. This happens over and over again, guys. Just look at the chart and you'll see how often this happens, just over and over again. Look at these pullbacks when we thought that that was the end of the world, right? Let's take a look at these. This pullback right here, 23%. Everyone said it was over, and Bitcoin rallied all the way back. Right now we're down 18%. People are like, oh, that's it, it's over. We're gonna rally back. And you could just keep doing this. You could just keep looking at this from up here to down here, 21% drop. I remember this. Everyone thought that it was over. They're like, that's it. There's not gonna be a bull market. We've topped out. When we were here, everyone was like, oh, that's it. We're gonna continue lower. We're gonna go down to $10,000, sub $10,000. During all this, of course, that was the bear market. But even here, during this pullback, we had a 55% pullback. That's insane, right? And what did Bitcoin do? It rallied all the way back and set a new all-time high. That's crazy. And if you just keep looking through each bull run, we've seen the same thing happen over and over again, guys. Just over and over. Look at this, 52% drop, 63% drop. From up here to down here, 15% drop. From here to here, 21% drop. We just see it over and over, these 20% drops and beyond. And what has Bitcoin done every single time? It's always, always, always bounced back. This time, I promise you guys, it's gonna be no different. Bitcoin is gonna bounce back. You just have to be patient. You just gotta give it time. Things are gonna bounce back. History tells us things are gonna bounce back. This year so far, we've gotten the most bullish news ever. We have a Bitcoin ETF. We have an Ethereum BTF. We have pro-crypto presidents now. Trump is already accepting donations in crypto. Biden is beginning to accept donations in crypto. They're both going to be pro-crypto during debates because they want to win that crowd. Guys, this is setting up to be, potentially one of the biggest runs for crypto ever. Where the top is going to be, I don't know, but I think 200 and beyond is a possibility. I do see some people calling for, 500,000, $1 million. I think that's unrealistic. I don't think we get there, not yet. But I do think between 150, I think 100 this year is possible, is a possibility. I think 150 to 200 is possible next year. And yeah, and then for Ethereum and altcoins, they're gonna follow the lead, right? They're gonna follow Bitcoin. So guys, it's a time that you should. I know it's scary. I know some of you are panicking, but you should be very, very bullish if you just kind of zoom out, look at the entire market, what's really going on, what's really happening, and things are great. I mean, things are really great. Things are really looking great for the future, and it's setting up to be a hell of a finish to this year and a hell of a finish to this bull run. So that's all I gotta say on all of that. So we've been here for over an hour now, guys. Thank you guys so much for tuning in. I'm gonna cut this up. I know this is a bit long. So if you guys tuned in for this whole thing, thank you. If you've missed parts of this, I'm gonna cut this up now. I'm gonna have some lunch, cut this up, and post this up as a video to hopefully summarize the majority of this. So thank you guys again. I will try to do this a little bit more often. We had Awi. He said, yo, I think Iwi, I don't know. I'm not sure how to pronounce your name, but what's going on? Appreciate you tuning in. Giannis, of course, appreciate you tuning in as always. Didi says, do you think it will go down further before it turns bullish again? If it were to go down lower, it wouldn't. I don't think it would happen right away. I think it would take a little time. I think we need to consolidate, as you saw on the daily time frames, 4-hour time frames were oversold. I think we need a relief rally first, maybe bounce up to like 64, 65 ish. If we were to get rejected there, then we could potentially revisit 58, maybe go lower. I don't know. Again, I don't know, right? Nobody knows. That's the thing with this. Nobody really knows. Best thing you could do right now, dollar cost average your way in. Like that, you get in here, 61. If you would have bought yesterday at 58, that would have been amazing. At 59, at 60, right? There's a lot of opportunity. You just got a dollar cost average. We don't know how low it's going to go. So, yeah, I really don't know. I do think we're due for a relief, though, a relief rally here. So thank you guys again. I'll see you guys on the next one. As always, peace and love.